Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at Adobe, ticker symbol ADBE. They do report earnings after the bell. We are going to look for bear and bull targets, depending on how earnings go. If they're good and the stock price reacts well, where we could see the stock going, if it does the opposite, goes down, not so good earnings, maybe bad guidance, how much farther could it go? We're going to run my stock calculation to kind of give us a direction of potentially where this could be going. We're also going to back that up and look and see what institutions and hedge funds are doing. Are they loading the boat on this dip, or are they dumping it all? We're also going to look at some technical indicators and the balance sheet. Let's go ahead and hit the subscribe button, click, and let's jump in. All right, so looking at a near target, I mean, we have a huge gap from 570 to 526. That is an incredible gap, about a 10% gap down, and then it's down to 444 now. So I don't expect the stock to go $80 to fill up to this gap and fill it. Well, I guess 80 to 100. But if it is positive earnings, actually, we might have another gap here. We do. So we have two gaps to look for. So 468 and 525 to the upside. If, again, the stock reacts well, Adobe could say they just scored the lottery for some reason and the stock could dump. It's earnings. Honestly, you really never know. So we're gonna again just mark the price targets at 529 and 468 to the upside, 468. And then to the downside, let's see if there's any gaps on the downside. This is gonna take us back just a moment. Ooh, Adobe just filled this. There's a gap right here. Do you see what I see? Wow. Yep, this gap got filled right here, but this gap never got filled. So we're going to do 372 to the downside. That's about $70. That's about a 20+% move, I think. I mean, I'm just doing math off the top of my head. It's probably a different number than that. So we filled this gap. We have this little baby gap here. This gap has also not been filled. 313. I don't know if we get to 313, but I'm just going to note it down. And I mean, we've seen some brutal earnings the past couple of days. We saw UiPath get clobbered. Well, I mean, by the time you're watching this, it's several weeks. Salesforce, is Adobe next? Good question. Thank you for asking. So we have some targets. Again, to the upside, 468, 529. To the downside, we have 313 as the low. 372 is where that other gap is. But if you know me, you know I like to look at the bigger picture. And the bigger picture, I'm just going to draw some lines because I am a chartist at heart. And this looks too good to be true. And where does this, if it continues to go down, 312, 313. Okay, if it does continue its downtrend, I mean, this support is at 313, which is absolutely insane. And then we've got a little doo-doo-doo here. So again, support, resistance, support, resistance, support, question mark? We don't know. Looking at some technical indicators, these are my go-to indicators. We have strength if the stock is getting hot. This is at a 46. I think the bears have control. Ooh, this is brutality in the desert. I live in Vegas. Adobe, I think, is based. Are they based in Oregon? We're gonna look. I'll just look because that's a good question. Excuse me. Momentum's on a downturn. Money flow just straight up and going down. Relative momentum get. I think the Bears are obviously in control. It went from 630 now down to 444. It looks like institutions are selling. Again, we're going to run our calculation and see. And then we'll also, let's just go ahead and get this bad boy loading right now. ADBE. This page does take a second. So we're going to look and see what up to the day SEC filings are as of today. FinViz, I don't know how often they update this, maybe every quarter. I don't know. So let's run my proprietary calculation just 1 second. Shares outstanding, this is beautiful. This is just natural and organic accumulation of the shares going down over time. Sales, this is a perfect stair ladder right here. Stair step, ladder up, whatever you want to call it. EPS, definitely plateaued for our 2020, 2021, 2022. Finally broke out 2023. Let's look at some other metrics here. Quick ratio passes the test. Anything over 1, basically. PE, this is expensive. Forward PE is slightly expensive as well. Basically, if they continue their revenues, guidance, margins, etc., they're going into the future. They are going to be a little bit cheaper. Earnings per share this year 12%, next year 12%. EPS 5 years, I never pay attention to that. You can't really predict 5 years from now. Past 5 years, this is very good. Sales past, very good. They're profitable. Yep. Gross margin 87%. That's incredible. Every $100 they spend, they get 187 back. Or they spend $12.77 to make $87. I think I'm butchering that math, but basically, that's insane. High growth companies, gross margins are typically 30 and above. This is way higher. Shares float, quite a bit of shares. Not that much shorting going on. Good volumes. 25% down this year. Year to date, for last year, it's up 6%. Again, like I said, if you bought this time last year, you're basically flat. Okay, we're gonna run my calculation now. And this is gonna give us a good idea of kind of where we're at. So 199 billion, 250 million in market cap, very nice. Plus 4 billion, 800 million in income, good for them. 4.8 billion, yep. Plus they do 19 billion, 920 million in sales, freaking fantastic. My guess is they're gonna start doing a dividend within the next 3 years. Yeah. That's my guess. 223, this looks about right. Yep. Now we're going to go include cash and account for the debt. Balance sheet, 6.8 bill is pretty good. And they're in the US. Where's their headquarters? Let's see the headquarters. It's headquartered in San Jose, California. So I was wrong about Portlandia. Okay. And cash again, plus 6 billion, 820 million. Total debt, not that much. 2 billion minus 2 billion, 560 million. Okay. And just really quick, total assets 28.7 bill. Total liabilities 13.2 bill. That is beautiful. Their assets dwarf liabilities more than 2 to 1. So for every liability they have an asset, which is muy bien. Muy bien. Just making sure we don't have the CEO and other people swing trading the stocks. Mark Garfield sold 795 and 297 or 97, sorry. But he got 191 here. And where's Garfield? Where's Mr. Garfield again? Sold again right here, 96. Mark Garfield 299, 26, 520. Yeah, I mean, obviously overall I don't see any red flags, but very nice. Mark Garfield sold 298. Scott sold 768, got 1705. Nice. Garfield 228, 298. Okay, very cool. Anywho, let's continue on my calculation. 228. We're going to divide this by 446,090,000. $511 stock trading at 447. Analysts have this at 619. We see 445, that was in March, 499, 519, HSBC, 519 to my 511. So I do see some upside. Analysts have this going higher than I do. One thing that's gonna let us know if that's really the case, because my calculation, I would say roughly kind of aligns with what analysts have typically, as long as the stock doesn't do a dividend. For this one, my price target is lower, and I think I know why. It's because the market cap is substantially lower than what it was before. I mean, if this was up about 5, 10, 20 billion, we would be a little bit higher for the stock price. Anyway, I'm showing upside, analysts are showing upside. That only means if I'm saying it could go higher and analysts are saying it could go higher, hedge funds and institutions are likely buying because they think it's going to go higher. So old data says they have 84% ownership. This new data should show more than that. 90%. So that is about a over a 6% increase, which is nice. Look at this shave. They got shaved. That was the high. Was that 2022? I'm just gonna blow this up really quick. December of 2021. Okay, let's go look at December 2021 real quick. Oh yeah, right at the all-time high, everyone jumped ship, the stock, dead cat bounce. I don't know. Anyway, institution ownership is up. It's not down like this is showing again. And then the Vanguards and the BlackRocks, let's just see what they're doing. Vanguard increased a little bit. BlackRock added over 1 million shares. Vanguard added around 800,000 shares. So again, the big boys and girls are adding. We discussed the bull and the bear targets. We discussed the potential, my calculation. Based off of this, I would normally think this is fine, but look at this momentum going down. You don't want to fight momentum, especially a good example. Look at copper right now, or look at crypto. You've got some really questionable companies who are not profitable, are losing more money than they're making, whether that's crypto miners in China, scattered throughout the US. If there's copper companies, there are, if the cycle, I'm sorry, if the industry is in a momentum cycle, everything will, all ships, all tides lift rising ships, whatever. But this is, I mean, the tech sector is just kind of getting hammered. Salesforce just got plowed. UiPath got plowed. Adobe, question mark. But I mean, look, this just makes me want to wait. And I'm fine waiting because it's trading well within this triangle. So I'm okay with waiting. If you're in this one, good luck. If you've made it this far, thank you so much for watching. I really appreciate you. Have a great day and good luck.